This is Scott Whitwam with your morning real estate investor update. And today's top story, more wholetailing. First, what is wholetailing? This is the process where a wholesale real estate investor sells a wholesale non-reconditioned property in the retail marketplace. These homes often appear on the MLS being sold as is. This tends to happen when a wholesale investor gets stuck with a property priced too high to sell to a retail investor. Many wholesalers will go ahead and they'll close on these properties themselves and then sell it for retail on the MLS in as-is condition. There is a growing retail market for fixer-uppers. Buyers see value in purchasing these homes to live in and benefit from the sweat equity. There has been a flood of wholesale offerings too high to purchase, flooding my inbox. These have seemingly changed the whole wholesale vertical marketplace over the last couple of years. And this is showing up in more wholetailing properties as is condition in the marketplace. Today's mortgage rate update, good news for investors. In anticipation of this week's Federal Reserve Board meeting, mortgage rates continue their slide. After hearing from two Fed bank chairs that both are advocating for a half-point drop, the only question I think now is how far will the drop to the current 5.33% rate actually go? However, the farther rates move down and the faster they fall, this will bring down the cost of private money and hard money for us investors. This should help investors' bottom lines, especially when you consider the increase in buyer strength for investor dispositions. Freddie Mac reported that as of the end of last week, the 30-year fixed-rate mortgage national average was at 6.20%, and this was down from the previous week's 30-year average at 6.35%. The 15-year also ended lower at 5.27%, ticking downward from the previous 5.47 plateau. In today's wrap-up, is this just election year good news? Let's not kid ourselves. Inflation is at 2.6%, excluding food and energy, nearly double of what it was just 4 years ago. And this is on top of a cumulative 21% inflation rise that we've had in just the last 3 years. Companies are closing, they're filing for bankruptcy, they're laying off workers. The latest revised job reports was not good news. The only tool that the Fed really has to reduce inflation is to monitor interest rates. I think at this point they're going to lower them, risking a real possibility of spiking inflation again. I think it's good news for us as real estate investors to get some sanity back in mortgage interest rates. But we need to deal with the real issue, and that is supply. Current energy inflation in August is still at 4%, and housing is at 5.2%. Be sure to subscribe to the Morning Real Estate Investor Update and catch me on the weekly Whitwam Wealth Real Estate Podcast.